YouTube, it's Tracy from Entrepreneur Girl, and today is Thursday, so we are going to be popping out a video, and today's video is going to be continuing our series on stock trading. So today is going to be our last video, kind of covering the basics, the terminology, and the fundamentals of the stock market. Next week, we're going to be getting into the meat of everything. We're going to start to talk about technical analysis and some like heavier type of topics. So eat your Wheaties before next week's video. You've been warned. There's a lot there. But today we're going back to talk about a couple of things. The first thing I wanted to tell you is what I had done this week. I opened my stock account and I got this book back out, and I wanted to share it with you because I've read this book. You can tell it's a well-loved book. I've read this book a couple of times. I actually made it mandatory that my kids read this too. I just think it's a life changer. I think it's a game changer type of book, and you probably heard of it because it's pretty popular, but it's Rich Dad, Poor Dad, and it's just the perception, the way it has you look at money and investing. And he has a bunch of books out, but this is the book I would suggest to you to read, and then if you like it, to explore his other books. But I got that back out and started reading it again, and I'm really glad I did. So I just wanted to tell you that because I think you should read it too. And then I popped out some magazines that I have subscribed to, and there's going to be a list of resources that I give you at the end of the video, but this is what I have so far. I have Entrepreneur Magazine. I have my Charles Schwab Investing Magazine. This is kind of a carryover from my Charles Schwab account. I'm hoping E-Trade has a similar thing, and then Money Magazine. But there's a lot of magazines that are specific to trading, and that's what we're going to be talking about at the end of the video. There are two main things that we're going to be talking about today. One, there are some general principles of the stock market that we want to cover, and two is pricing and how we look at pricing when considering stocks. Okay, so general principles of the stock market. Markets are always moving even after the closing bell. So here in the States, we have the closing bell and we think, okay, whew, that's it. But what we need to realize is that it's always going, it's always evolving. What's happening in other countries, you know, after we've closed, they've opened, and whatever happens to them while you're sleeping will greatly impact what you wake up to with our market. I'm going to give you a real life example to how this might come into play. This is just a made up example, but say I was holding Dick's Sporting Goods stock, and you know, we were doing fine. I was holding it. I went to bed, and in the middle of the night or late at night, Sports Authority announced officially that they were closing all of their stores. Well, a couple things could happen based on that news. Now remember, this doesn't really affect anything about Dick's, right? Dick's company fundamentals didn't change at all. Their earnings, debt ratio, nothing fundamentally changed about Dick's. The only thing that has happened this far is that Sports Authority, which is Dick's competition, has made an announcement. The thing might happen is that people might look at it and think, well, if their competition went out of business, then they are probably going to go out of business too. And so your stock holding in Dick's could plummet. Another thing that could happen is some people might go, wow, their competition is gone, so now Dick's is going to rock, and so your stock could rise. So you see how nothing fundamental has changed. It's all just perception and how people are going to handle the news of Sports Authority, a completely different company. But they're going to handle that news, and they're going to digest it, and their perception is going to change, and then that perception is actually going to alter the stock price of your stock. And all of this happened while you were sleeping. The point I want to make here is that 24 hours a day, 7 days a week, the value or the perception of value is constantly fluctuating. So whether it's the opening bell or the closing bell of the stock market really makes no difference, because around the clock, your stock price could be fluctuating just based on perception. Okay, the second point to that is not only is it people, right, like our opinion that's making things fluctuate. It could be anything in the global markets. It could be weather, some other place. It could be a war breaks out. It could be some type of economic issue. All the global markets are kind of interrelated and they all affect one another. And again, that's 24 hours a day, 7 days a week. The third point is all of these changes, all of this news that's coming in, all of these perceptions by people make the stock market have these swings. They don't stay stable. It's like a moody teenager. It's up and down and up and down, and that's called volatility. And it's being volatile based on all of this news moving it one way and then moving it another way. The changes are rational and some of them are completely irrational and emotional. So I call this the mood swings of the stock market because that's kind of what we can relate to, right? You know me, and maybe you're just like me, but I don't do well when there's no structure. And having this mood swinging stock market, I'm uncomfortable with that. I don't like that. I like it when certain action equals a certain result. All right, so what can I do? Well, I can create my own limits. And every time I enter the stock market arena, I can bring structure with me. I could bring my definitions, my criteria, principles with me every time I enter. I'm going to gather all of this information about the stock market. I'm going to be analyzing how I personally react. And we've talked about that in the past already. Am I risk adverse? Am I okay with taking on risk? So there's a big part of what happens in my trading is going to be based on my own personality. So not only do I need to understand the market, but I also need to understand myself and my personality and how I'm going to be reacting to the market. And I'm going to draw up these guidelines based on that knowledge of me and the market. And I'm going to be proactive instead of reactive. I'm not going to be reacting to all these swings in the market all the time. I'm going to be proactive with my approach. Now we know that we're going to have this disciplined approach that's going to lead to small losses and hopefully big profits. I have a high probability of reward tied to a low probability of risk. Take full responsibility to cherry pick based on my own criteria the best trades that I can. I'm not going to respond to, well, the market should do this, or I wanted to do this. I'm going to respond to what actually is happening right now. All this to say that the biggest obstacle that you're going to be meeting throughout this whole process is your emotions. I'm not going to lie, it's going to be a roller coaster. It's going to feel like a roller coaster, and I don't think that's really going to change from day 1 to day 101. I think it's still going to have those emotions connected to it because it's our finances, it's our desire to be right. It's the desire to be successful, and that fear and greed that we've talked about in the past. But, we can talk about all the programs in the world. We can really just put a ton of money into our trading accounts. But if we don't have our emotions in check, if we're not able to control the emotions through the process, then it's kind of all for naught. We're still going to have a high tendency to fail if we're letting our emotions control our trading. And we need to just discuss this now so that as we move forward, this isn't going to be playing a part of that. Okay, so as long as you're a trader, guess what? Emotion's going to play a part of that. And so I'm just going to give you an example. Say we do these videos and you're well researched. You've done every correct move. You've researched, you've planned your trade, but at the perfect entry point. Next day, the market goes totally against you. Your stock is plummeting and it actually goes so low that it's hitting your mental stop loss point. Okay, about this time you're freaking out, right? Your heart's beating, your head is spinning, you're, oh my gosh, it's, I finally put the money in, I finally start stock trading, and now this happens. Just great. Okay, so what are you going to do? Are you going to sell now? Are you going to hold and think that the stock's going to go back up? Thinking, oh gosh, I'm going to have to admit to others that I was wrong. You know, maybe this whole stock market thing's not going to work out after all. I'm going to do this not only at the beginning, but every hot tip that somebody shares with you, or every stock that you really believed in your heart was going to be successful, you're going to chase feelings of anxiety, disappointment, guilt maybe. They're going to be there. And then what you're going to do, maybe, you're going to ignore your plan. You're going to ignore your mental stop loss point. You're going to turn your back on that falling stock, just hoping, kind of burying your head in the sand, hoping that it's going to make this miraculous turnaround. You're not going to do that. That's why we're talking about it now. So what's the cure for this? We're going to get rid of the fear of being wrong. We're definitely going to get rid of the need to be right. And I realize that there's only choices, just choices to be made. We're going to make the choices based on the best available information to us. We're going to have a calm confidence that we have a good plan in place. We're going to trade according to that plan. We're going to stay emotionally detached. That's what these videos are for, right? Is to get that plan to you so that emotions are taken out of it. Now, the second thing we're going into now is price. Okay, so here is our tornado, and this is actually going to be our stock market. And we're getting into talking about price now, and we've already talked about all of the swirling craziness that comes with things like, you know, supply and demand, currency fluctuation, interest rates, analyst reports, and even public opinion and perception, right, which we just talked about. And all of this is swirling around in here until it gets down to the single point here on the ground. This is our stock price. Price equals the value at a single point in time. So say I have a Ford stock, and you and I decide that we're going to trade this stock. And we both agree that it's going to be worth $6 a share. I'm going to sell my Ford stock to you for $6 a share. And we both agree that that's fair. However, you believe that the stock is going to be going up. That's why you're buying it at $6, because you think it's going to go up and up and up, maybe to $7 or $8. Now, I'm selling you the stock because I believe that it's going to be going down. So I'm going to sell it to you for $6. Maybe I bought it at $4. I've already made $2 per share, but I'm going to go ahead and get out of it now at $6 because I think it's probably capped out and now it's going to start to trend down. So that is kind of the way a trade works. Unfortunately, only one of us is actually going to be right. And which one is it going to be? There's two main methods of evaluating a stock. One of them is fundamental, and the second one is technical analysis. Basically, two camps here. Some people believe that fundamental analysis is the only way to go. Other people believe that technical analysis is the only way to go. I'm kind of in both camps. I recognize that there's value within both. And since I want to increase my odds of being successful, I want to use all the analysis available to me. So fundamental analysis is kind of like the X-ray. It examines the internal fitness of a stock and tells us how strong it is. It focuses on supply and demand of the products or services that a company produces. Big into reports, profit and loss statements, PE ratios, analyst reports, market shares. It's real heavy on the fundamentals of a company. And a lot of these traders are in it for the long haul. They really kind of ignore all the up and down, all the drama, all the mood swings of the market, and they just mainly focus on the fundamentals of the company. Okay, the other side is the technical analysis, like analyzing the personality of the stock. Studies the actions, time, the price, the sentiment, and all of these actions of the stock, prices, the human behavior, are all kind of repetitive, and they form patterns on these charts. If it's believed that if you study the patterns, you can predict the next move of the stock. Personality, like the volatile teenager. It's up and down and up and down and up and down. And some stocks that you see that, you hear me talk about tech stocks because they have a tendency to be like that. They're kind of all over the place. And then there are some stocks, your safe stocks, your dividend stocks, your Johnson & Johnson, I think would be a good example of that. And it's pretty level over time. I mean, of course, we want it to be increasing, but it's a very gradual move. Typically, unless there's some big news story or some big drama, these stocks are pretty level-headed. They're pretty calm, cool, and collected. Their personality is different than a volatile stock that's kind of all over the place. This week we're talking about the technical analysis, but I want to take a moment now and talk about the fundamental analysis. Okay, so for the fundamentals, a quick and reliable way to find this is through the Investors Business Daily, the IBD newspaper. And if you look at this, what you'll see is kind of what we have here highlighted. It'll be your stock, and then there will be this set of 6 numbers and letters to the right of it. And this is what they all stand for, and these are in order. So like the first one here, you see the 99, and of course these 3 99s and the 3 A's indicate like the highest ranking possible, and such a stock probably doesn't even exist. But this is the order, and this is the criteria that we're setting as we're forming our criteria and moving forward with the choices that we want to make with our stocks. First one is the Smart Select Composite Rating, and that would be right here. And this combines all 5 ratings that follow into a single rating. And the stock's percentage off its 52-week high is included in this. And the results of your company is compared to all the other companies. And so then the stock is assigned a rating from 1 to 99, 99 being the best. So we are going to be looking for companies that are above a 70. Okay, next we have the earnings per share, and this would be the second number here. And this rating tells you a stock's average short term, which is less than 2 quarters, and long term, which is 3 to 5 years, earnings growth rate. So the number you see is how your company compares to all the other companies. The scale again goes from 1 to 99, with 99 being the highest, and we're going to be looking for that above 70 rating here. Okay, third, we have the relative price strength rating. Sometimes this is called the RS, and this rating measures a stock relative price change in the last 12 months in comparison to all the other equities. Again, it's from 1 to 99, and we are looking for one that's above 70. Okay, the first letter that we have here is the Industry Relative Price Strength Rating, and this rating contrast a stock's industry price action in the last 6 months to all the other 196 industries in the IBD's industry group list. And this scale is in letters, and it goes from A to E, and A representing the best, and we're going to be looking for ones that have an A or a B. Okay, now we have sales. Oops, actually I did that wrong. Sorry. Sales plus profit margins plus return on equity rating. And this rating crunches a firm's sales growth rate during like the last 3 quarters, before and after profit margins, return on equity, and it puts all of that into a letter. Again, the ratings are A through E, A being the best, and we're looking for an A, B, or C. And lastly, we have this accumulation distribution rating, and this rating applies a formula of price and volume changes in the last 13 weeks to determine whether a stock is being accumulated, which just means that it's being bought, or distributed, which means it's being sold. Again, it's A through E, A being the heaviest buying, C being kind of a neutral buy volume, and E signaling heavy selling. So we want to choose stocks that are rated A, B, or C here. So I know these are big words, and I know that we're not quite to the point where we're understanding all of what I just read. It sounds all like, huh? What is she talking about? But on the fundamentals, what I want you to get out of this is that you're starting to learn about stocks. We're going to be starting to watch CNBC, right? You should already be doing that, Bloomberg, things like that. Because if you walk into any trading room, you will no doubt see televisions tuned in to CNBC or Bloomberg financial networks. And, they report the global events, they interview CEOs, securities analysts, and they also take you onto the floor of the New York Stock Exchange. So what I want to do with today's video is I just want to get you aware of the fundamentals, and I want to get you aware of how they're broken down. Not that you need to have this huge understanding of it right now, but you need to start looking at this stuff. Start watching CNBC, start watching Bloomberg. You'll see one day, oh no, we're going into a recession, and then you'll see the next day, oh, jobs are at an all-time high, and you will see how you're watching the same channel is two totally different news stories, 24 hours apart, and all of the stocks are reacting to it. Okay, so your homework this week is to be watching CNBC, watching Bloomberg, going on some websites that I'm going to give you here. Start looking at some magazines that maybe you want to get a subscription to. So this here is bigcharts.com or bigchartsmarketwatch.com, and these are free. These are free interactive charts, quotes, industry analysis, screen traders, commentary. And basically the charts are going to offer most all the indicator studies that we're going to be talking about. Plus you can do overlays of other stock charts, and it's great for beginners. So please check this one out, bigtrends.com, and it's a good website for traders. It offers daily market analysis, email newsletter, feature articles, and trading education, which is important to us right now because we're learning. This is bloomberg.com. It offers news, detailed stock list, quotes, and more. You can also sign up for Bloomberg's Market Monitor. Yeah, Market Monitor, I think it's called. And it will track your stocks and indexes, and it gives you an update on their performance. So you can kind of set it up to what you're currently invested in. Okay, this is briefing.com, and it's a great website for pre and post market analysis. So like before the market opens and after the market closes. It also displays updates, like news briefs during the trading day, so you can kind of keep an eye on it throughout the day. Do nothing else, you should be watching CNBC.com on your computer. I always have it like on the TV in the background, and it will give you the top stories, the latest headlines, what's going on in the world of finance. And it's important to watch and kind of hear the terminology, watch the opening bell, watch the closing bell, see what it looks like on the stock floor. It talks about the Dow, the S&P 500, the NASDAQ, things that we've already talked about, but the more you hear about it and the more you watch it, you'll really start to understand what these terms mean. Okay, this is dailystocks.com, and I absolutely hate the way it looks. Like it's all just kind of, I don't know, it just doesn't look appealing. I hate it, but I wanted to include it because it's such a comprehensive website, and it just offers this huge menu of stock market information. This is the Investors Business Daily that we talked about. It's at investors.com, and it has the articles, the news, analysis, educational tools. Okay, this is marketgauge.com. A lot of people like this one. I haven't really seen what other people are saying about it, but maybe you will. So I did want to include it. This is marketwatch.com. It offers news and daily columns, a portfolio tracker, I like that, stock and industry screener that you can see there. It's a fun finder, and it shows you the top gainers and losers for the day. So I also like that too. Morningstar is a well-known stock and fund trading service, and it offers, all the top stories that were happening. It gives you kind of like a market barometer, information on stocks, funds, ETFs, hedge funds, all of that at really no charge. MSN, that's really popular, has news stories, snapshots of current market activity, charts, quotes, SEC filings, company profiles, analyst ratings. So this is also a very, very popular one. There are literally millions of financial websites to choose from out there. I gave you the word of mouth recommendations from other traders that I've received. You might receive others. If you do, hey, put them in the comments below so we can all benefit from that. At great risk right now of getting into this state of overwhelm. And there's just so much information that sits at your fingertips. It can be totally intimidating. And that's not what I'm trying to do here. So don't go to every single one of these every day. Kind of look at all of them, scope them out, choose 2 or 3 that you're going to hit, because you really can't go wrong with any of this. And a lot of the information is the same site, you know, over site. Next thing we're going to be talking about is magazine subscriptions. Okay, a couple of magazine that would come to mind that targets traders would be this SFO, Stocks, Futures, and Options magazine, and also traders.com, which is a stock and commodities magazine. Now, there's a host of magazines geared to investors and the U.S. business world, and you can find them anywhere, you know, basically at any grocery store, bookstore, newsstand, shelf. So you don't have to get a subscription, but maybe the next time you're in any of those areas, you know, find some. What they're good for is getting yourself immersed in the language, in the world of stock trading, in the news that's affecting it. And, you know, you just, the more you immerse yourself into this, the better you're going to have an understanding of it. So your homework would be to start reading some books, start getting some magazine subscriptions, start looking at these websites, you know, start understanding the fundamentals that we have covered thus far, because next week we're getting into the heavy technical analysis aspect of it. And I kind of want you to have this down pat. Kind of thinking maybe there should be 2 weeks between videos, but you can always just push pause and not watch the next video until you're kind of caught up. But I want you to be comfortable at this point, up to this point, with what we've talked about so far in the last few videos before next week, because we're kind of switching gears and we're getting into the meat of it. Well, guys, I hope today's video was really useful to you. If it was, please thumbs up below, give a comment, tell me where you are, what's been going on with you. Love to hear from you guys, and I'll see you next Tuesday for Tracy's Tuesday Tips. Bye.